Gave up managing billions to become a better investor. Episode 30, the usual August suspects. Hello. Yes, it's the end of week 6 of the quarterly corporate earnings season, which I guess sort of suggests we're kind of near the end of the quarterly earnings period, which is, of course, absolutely correct at a certain level. There's some interesting numbers to come out next week, though. BHP Billiton, for example, Nvidia, which has become very popular recently, plus various other names. You know, frankly, you can find corporate earnings numbers out almost every week of a quarter or a year. It's just that you get some periods of time where it just gets busier and more insightful than others. And we've kind of gone through now, I reckon 95% plus of the global corporate earnings season. That would be my thought. We'll come and talk about some of the recent comments in the last few days from a sort of a stock corporate earnings season perspective in a few minutes' time. Let's do a little bit of macro first. And on my last podcast, I talked about the fund management survey, always a fascinating time. That came out on Tuesday on the week just finishing. That was kind of interesting. Lots of sort of angst and excitement and everything else, as always, as you get with that interesting monthly survey. As I noted, fascinating to me to see that we'd got apparently back to optimism levels, as per the survey, that we hadn't seen since early 2022, that kind of just after the 2021 general positivity about, yes, we might have COVID challenges and lockdowns, but equity and bond markets are going forward. And we all know what happened in 2022 after that point. So kind of interesting, we just back up to that sort of peak optimism-ish sort of recent level. Particularly as you may have noticed that something else I talk about often in a podcast, which is the Fear and Greed Index, run by CNN. Really good to look at, fantastic free insight. Kind of striking to see at some points yesterday, Friday, it's Saturday as I speak at the moment, some points on Friday when the Fear and Greed Index had gone into fear, which was interesting. I think it finished the week just about into the neutral zone. But as always, you know, as Warren Buffett said, in fact, a number of people have said, you've got to be greedy when others are fearful and fearful when others are greedy. So I always use the Fear and Greed Index as a great insight into what you should be thinking about at a kind of a top-down macro-ish sort of level, and then to kind of bring those insights into your sort of bottom-up sector stock picking appraisal work. So fascinating to see. Fund management survey, best optimism since sort of February 2022, and the fund management survey kind of saying that, oh my goodness, we've got maybe into a fear zone now, or neutralish as it ended the week. As you can see, it's a mixed up world out there. We know that. And certainly from a macro perspective, lots that you could be theoretically still cautious about. I mean, bondholders must, as discussed, you know, for full distinction, a definition and related. I'm not a current holder of bond positions. My personal pension fund has 0% in bond and related investments, but I appreciate many investors for many half sensible reasons have good exposure to bond holdings. Kind of fascinating to see that once again we've had another disappointing performance for bond investors. And that is all despite lower, generally, we've seen it in the UK, certainly over data out over the last few days, lower inflationary pressures. And consequently, you would have thought a kind of a bond market, or at least bond yields, which should be getting a little bit more optimistic. Lower yields, higher prices. But as we've talked about before in previous podcasts, it's not just inflation in some kind of sole manner which becomes important for bond yields. You've got to think about debt, which is undoubtedly still going up, government debt and related, as unfortunately we all know. Growth levels always are going to have some kind of impact. I know that bonds are often perceived as being super safe, but you've got to also acknowledge that when you get a lack of growth, then maybe there are perhaps issues and challenges with where is the flow of people's bond investments, where are they going to come from? Do we actually need to offer higher yields in order to attract people with the more limited amounts of free capital and investable capital to allocate to bonds, etc., etc. There's lots of ifs and buts. Geopolitics is still a huge issue, of course. I mean, we don't need to just name Ukraine, Russia, matters in West Africa, and related Niger and related over recent weeks, concerns about Chinese slowdown, Interestingly, of course, we've got the BRICS meeting next week as I speak, which will be absolutely fascinating, of course, plus various other geopolitical issues we could talk about in terms of concerns about whether we're going to see global trade impacts or not. Again, something which surely the BRICS meeting next week is going to be discussing at some level. So lots of issues to be thinking about. But it's interesting, isn't it? As I've always said consistently on these podcasts, macro, it's important, it's insightful. You should be spending some of your time thinking about it, be it about the impact on certain financial classes, or be it just on the fact that nothing exists in a vacuum. It's impacting us all at some level as investors. But my personal view is don't spend more than 25% of your investment time on macro and related matters. Spend 75% of your time on sector and stock analysis. And I say that because, of course, many things are factored in. Let's say there's some general angst about macro issues. You're reading it on the papers, hearing it on the internet or whatever, that XYZ is happening in this region, and oh my goodness, we surely got to worry about a recession upcoming over the next 6 months or whatever. A lot of these issues are quickly factored in, and as always, as we've talked about many times, you've got to look forward and you've got to say, okay, so what happens next? What isn't correctly anticipated? And that's a little bit of macro work, of course, but it's also saying, well, despite the maybe tricky backdrop or maybe the brilliant backdrop, which sector and stocks are actually underappreciated, which are still offering value, which still could offer potential over the next a few quarters, next year or two, what isn't factored in, etc., etc. So we come back again to the world of sectors and stocks, and despite it being week 6 of the corporate earnings season, I thought there were some really interesting insights over the last few days. And I said this actually with a little bit more of a true global orientation here. So I know I spent a little bit of time on the macro chit chat over the last few minutes talking about angst and geopolitics and oh my goodness, where is this or that potentially going to go? But I thought that there were some really interesting comments from various individual companies in many different sectors, actually. I'll give you 4 or 5 quick examples. Estee Lauder, can't say I'm a big user myself, certainly not a shareholder of the company, but certainly has been around for very successfully, super successfully for and quite a few decades now. And even though, you know, when I look at La Mer or MAC or Bobbi Brown, of course, the Estee Lauder brand per se, I only have a certain awareness of it. It's one which you can do a little bit of research in yourself and probably have a better understanding than me. But clearly I can see why it's been popular, successful over recent years, and frankly, far, far, far further than that. I tell you what I found interesting about their numbers, which came out yesterday as I speak, so on Friday in the week just finishing. And it wasn't so much the fact that the shares did fall back actually on the day. They're down sort of circa 40%, either side of 40% over the last 8-9 months or so. And what was fascinating is it's not that the company doesn't have great products or a feeling that there's going to be good scope for their various ranges. And it was the observation really that I found most interesting was that their biggest hopes looking forward, and I guess they're pitching this over the next 2, 3, 4 years, is with China. And they're saying that at a time when there is no doubt their prices have gone up materially, as have many things, of course, many matters, as we know. I guess they're sort of perceiving, like many luxury-ish sort of consumer and related companies, that the key is to have areas where you are an elite, attractive, higher end range sort of brand generally, and hence the capability to increase your prices is a bit more apparent. You know, we've talked on these podcasts before about various luxury good companies, and I can understand that. And pricing power, I really love as an insight into a company. Whether it's actually got pricing power or not. And I think it's fair to say that Estee Lauder probably does have pricing power. However, as always, you can have great pricing power, but the trouble is that you may still struggle to grow. You may just have to acknowledge that you're going to be a smaller business, albeit making great margins, but just satisfying, finding, in terms of your underlying users, a smaller part of the population. So therefore, I found it kind of interesting that they perceive that China, which, yes, I would imagine, much like other key points of the developing markets, is going to get richer, is going to have greater scope to buy goods from a bunch of not just consumer companies, but luxury good companies. And frankly, we've seen that, talked about it on previous podcasts about Burberry and LVMH and various brands like that. So I get that impression, and I would expect that to be true. However, I do also observe that you've got certain little subtle impacts here which are impactful. For example, that they noted that the group, the people who buy Estee Lauder products when they're doing traveling matters, something which certain other luxury goods talked about before, that's been probably trickier than they thought, despite the fact you've seen more recently, obviously, some opening up of the Asian / Chinese travel market. That's been tricky, and I know they're hopeful that this is going to continue to improve, but I kind of wonder, the super rich will always be able to travel, will always be able to buy goods at great discounted tax rates and related as they do so, and that will still no doubt be supremely helpful to a bunch of luxury goods or premium consumer products areas. But your average consumer, who perhaps is sort of the person who is not going to be a regular buyer, but will be the occasional buyer, and it's not just in developing markets. You could kind of still say the same for a bunch of what I guess would be called developed markets. And it is kind of interesting how when you look at sensitivity in recent months, and I think undoubtedly prospectively going forward, of the average purchaser in Europe and the States, how that could impact and change. And you need, if you're going to sort of keep on pushing up revenues and profits and margins, you're going to need a range of products. And this is where I kind of, I'm personally not a big consumer of luxury good products in any case, a bit more of a consumer of mainstream consumer good products. And I have to say that that's an area where I want to see pricing power, but I also want to see a slightly broader skill set in terms of the sort of people you're attracting to your underlying products. Anyway, Estee Lauder is an interesting one because when I look at the numbers, and I've got to do a bit more work on the valuation, I'm still not wholly satisfied with my insights there, but I haven't held the shares forever. And am I sort of feeling, oh my goodness, this share is unbelievably cheap, I must be buying the stock today? A bit like shares I know are probably a little bit better, companies such as LVMH or Burberry. I've been a big Burberry supporter in terms of an investment supporter for large swathes of the last decade plus. And I made good money on those shares, but I currently don't have a holding because it's kind of got to the level where I'm thinking, yeah, it's not horribly expensive, but it's not one I must invest in, which is sort of always the way with investments. Things change and evolve and shift. And I learned quite a lot from listening to the Estee Lauder call. Again, listen to conference calls as always, because you get so many insights from them, so many wonderful little observations, which when you pull everything together in your role as sort of a macro and sector stock thinker, that's when you start getting those little bits of those nuggets of insight, which actually help tell you what is factored in and kind of what isn't. Anyway, going to be thinking a little bit more about Estee Lauder this weekend and beyond, but I'm not immediately thinking, oh my goodness, I've got to add it to the portfolio list. But is it the sort of company I want to, a bit like an LVMH or a L'Oreal or a Burberry and 1,001 other consumer companies I want to be continuing to look at? Absolutely. Because consumption or consumers per se, many don't perceive the notion that consumption is a much bigger part of the Chinese economy and pretty much many developing market economies than any other part, be it industrial, agricultural and related. But that is the shift that is going to become more and more apparent to more and more investors as the 2020s moves into the 2030s. think it was now, 6-7 years ago that we saw the consumer sector in China move beyond that of industrial stroke agriculture. And frankly, that's not unsurprising at all. And in other developing economies, in other parts of Asia and South American related, you can see that shift occurring as well. And that's kind of interesting for any global investor, be it if you're buying FTSE 100 or S&P 500 listed companies. When you look at where they're ultimately making their revenue numbers, where that split is getting increasingly correctly developing market centered, which is a good thing. As I say, you might be buying a UK listed stock, but it isn't centered in the UK after all. Actually, in many cases, hardly at all. It's funny to talk about kind of going from one company. We've talked a little bit about China and related areas with the context of Estee Lauder. A quick word about another, actually in this case, purely Macau-centered, Hong Kong Macau-centered company, Galaxy Entertainment, which is an interesting name to say the least. A company who I have visited as an investor, I should say, rather than a sort of a kind of a consumer of their interesting Macau entertainment offerings and related. Although wouldn't mind an opportunity to go and see some of those actually prospectively, but hey, we'll see whether that becomes an opportunity or not. Interesting to see their shares down about 5% this week after their latest set of quarterly numbers. And, the world of betting and casinos and related matters, it's an interesting space. It's a space that actually I was looking at some rank group numbers in the UK this week earlier too. Slightly different part of betting and related. I'm not sure if Mecca bingo and related is quite akin to the world of Galaxy Entertainment and other sort of slightly more casino-centered businesses. But let's face it, you're again sort of thinking about how are consumers spending, where are they spending, what are they doing? And all of these companies have the same basic problem, which is the world of technology is shifting. And if you want to bet in a Mecca bingo-esque sort of place, or if you want to go and do casino areas, you can do those online. You don't need to physically go there unless you kind of fancy the angle of what a visit to a location brings you, meeting people, chatting with people, having a drink, whatever it might be. And of course, and I felt this the last time I went to Macau, that is the reality of the location. Obviously, Macau has a lot of medium-term positives still, unless the Chinese sort of broader economy opens up to the world of gambling in a more formal, allowed fashion. But we shall see on that front. All I do know is Galaxy Entertainment has always struck me as actually quite a smartly run business. They think they're doing a good job at slowly but steadily building their Macau and related focus. And the set of numbers today showed good progress. Unsurprisingly, lack of China moving away from lockdown, allowing more people to go to Macau, getting the right to go there, going to do some gambling and relate. Let's face it, it's not beheaded, not just the Chinese nation that likes to gamble. Frankly, every nation does, which is, I feel, absolutely fine so long as you're kind of prudent and related to do so. So I'm not surprised it's still inherently a growth area, and an area where there is no doubt only a relatively limited number of what I would call sensible, clear performers. But it was kind of interesting. The shares have sort of, fell about 5% over the last week. I think they're down about 5% odd year to date as well. So it hasn't been a disaster. It's kind of interesting, though. For quite a while now, a couple of years or so, I've been watching Macau stock for ages, but I was quite trying to get around my head at what level would I buy Galaxy Entertainment again, a stock which I made good money on in previous times, quite a number of years ago. And I came to the conclusion over the last couple of years that 40 Hong Kong dollars was a really good level. And that remains the case. The stock's about 50 Hong Kong dollars at the moment. And it's interesting. I can still see scope for growth. I can still see opportunities from new developments and related. Am I feeling that? Am I also feeling that though in a bunch of other sectors, or finding other opportunities, not just across Asia, but across the world generally? Absolutely. Do I still think that kind of 40-ish Hong Kong dollar level is still my kind of preferred spot to actually buy a few Galaxy Entertainment shares on, no doubt, which would be perceived as a, oh my goodness, bad day? I think it probably would be. And generally, actually, if I look across the broader East Asia market, I can find areas that I'm a little bit more interested in. But I guess that's true of, frankly, Europe or the States as well. It clearly is an active investment world, is what I'm trying to say. But yeah, again, interesting to read and listen to the comments of Galaxy Entertainment as well. Also, a couple of other further names, fascinating to read or listen, actually, at length to the full conference comments by Deere, John Deere. You know them for tractors, combine harvesters, and various other parts of their business. Undoubtedly, they're not just an agri company, but it's what I would call the most important part of their business. And it's interesting. I've long respected John Deere as a company. I must admit, I personally don't own any shares in the company at the moment, but I'm of the impression that it's sort of from a sector split perspective, and I've said this before over a podcast over the last couple of months or so. I have to say agri, because I sort of mix the sector with the broader commodities, mining, I guess theoretically gold, oil and gas, and other stuff perhaps people are a bit more comfortable investing into. I think agriculture, ag, is underappreciated by people. Not just because when I think about it on a medium-term perspective, I see such scope still for progress in the area. And I think that is underappreciated. And John Deere shares aren't what I would call overtly cheap, but they're kind of a little bit expensive for a reason, in the sense that, as they talked about in the conference call, still continued good prospects for all sides of their business, particularly on the agri side. And because it's kind of interesting, they are a global player, but undoubtedly the pecking order in terms of which parts of the world are more important than others. First up is the States, where progress, they think average farmer wealth levels, or at least capability to keep on buying Deere products or second, third hand Deere products is still good. Interesting to listen on the call to the observation that apparently the average tractor is owned between 4 and 5 times, which I thought was kind of interesting. Tells you that they last for a while, I can tell you as well. What was really fascinating to me, though, was something which, listening to the ADM numbers a few weeks ago, I think I talked about them on a previous podcast, is the very interesting position of South America at the moment. Important position for the global ag market, and certainly important position, still continuing important position for John Deere. And again, it sort of makes me think that when people think about developing markets, yes, it's very easy to think of correctly. Look at the BRICS meeting, right? People talk about, what are China going to say? In more recent last year or two, what are India going to say? The inevitable, what is Russia going to say? And I guess South Africa, or the broader Africa region, and Brazil and the broader South America, Central America region, I think is a little underappreciated, or not just looked at as deeply as perhaps it should be. And again, it fascinates me as a part of the world which I think many investors just don't monitor quite as much, despite the fact that it is progressively becoming more important. Yes, Asia is proportionally the most important of the developing parts of the world in terms of pure size, but that doesn't mean other areas are not uninteresting. And a bit like, as we talked about before in investments, you've got to think about matters that other people aren't particularly focused on or looking at. And the ability, I think, to know more than 90% of the market in areas of the world important sectors which are maybe active in those areas is actually pretty good, because you kind of see it a lot on conference calls and related. If a company is perhaps listed in the States or in Europe, UK, etc., that's the focus. It's how is your UK business doing? How is your US business doing? Yes, super important, historically very important. But prospectively, trying to get your head around, okay, how are you getting on in Asia, other developing markets and related, often slightly underestimated. And I think, particularly given that sometimes for some correct reasons, let's face it, we talked about South America a second ago at John Deere, but yeah, as you will note by the recent update about the Argentinian peso, material inflation in the country and rate at the moment. It's kind of fascinating. We're going to, if I'm not careful, talk at length about Barrick Gold, which we spoke about on a couple, 2 or 3 podcasts ago. But again, a great company at many levels, in my opinion, but fascinating as well geographically, just because they could give some great insights onto what's happening in South America from their perspective. They gave some interesting updates on Argentina, as well as other parts of that region, as well as even more fascinating to me is what they were saying about Africa and Asia. But that's how investment should be. It should be so much more than just what is the home country, where is a company listed. That's where all the other insights come from. Anyway, John Deere, interesting quality company. You can't own everything. If you do own shares in it, I can't fault you for that. I saw the shares went down, as I said, a little bit during the last week on following the numbers on Friday, but actually I think it's getting, kicking around again at some interesting levels. There is a time and a place where I will buy this stock again, but I think just because of loads of other ideas out there, hasn't quite hit the must buy and buying sort of list, but it's getting there. And again, it tells me that, and it'll probably be the focus of a podcast over the next week, which is what on earth is happening in different sectors? What has the earnings season really told us in terms of that kind of sector split? And you recall that my sector split is a little bit different than conventional S&P or Stock 600 sort of split lists, but we'll touch more on that next week. Final couple of comments, actually in the financial sector, an area which I've got low exposures to. In fact, my only exposure at the moment is to the Prudential. That is the Hong Kong / London listed insurance part. And they've got their numbers out in a couple of weeks. That'll be interesting. As always, I haven't got a big holding. They're one of my smallest ones. But actually, at the moment, the only sort of broader finance sector stock that I feel comfortable with. I'm just finding so many other opportunities elsewhere in the marketplace. But again, we'll fit that up on from a sector perspective and a company perspective in due course. Two other quick observations about financial listed companies. One was Aviva in the UK. I mean, a good company. I have held the shares historically. I did sell out to actually a share price slightly north of where the share is today. So that worked out really quite well. And of course, Aviva is so much more than just what's the share price. That, 7-8% dividend is wholly attractive. And, honestly, even though when I run my numbers, and it was apparent again when I was, and insurance companies, by the way, I may have said this before, the hardest by far to look at. If anybody tells you that financial stocks are easy to look at, don't believe them. They are the hardest by far, in my opinion. But anyway, I can just about get my head around them. And Aviva, I actually slightly pushed down my target, my fair value price after the numbers a few days ago. But that price is slightly above the current share price. Plus, you're getting that far better than a 10-year or bunch of corporate bond angles in the broader marketplace. So I can completely understand it if more conservative investors, particularly people who are interested in dividends and the like, would want Aviva shares. I get you. It's total return world. And you could tick the box on that. Not one for me personally, but I could understand it. The one which I guess I'm actually a little bit frustrated that I missed out on, because I should have. I often talk about, you need to sort of think about macro matters. You've got to merge that with your sector and stock work. Bank of Georgia, another very good set of numbers. Look, it's interesting to look at Georgia. And of course, Georgia as a country, great progress over the last a couple of decades. Great challenges too, of course, over a slightly longer period. And great uncertainty, I guess, an uncertainty which is naturally very apparent when Ukraine had its most difficult moment 18 odd months ago of recent times. And clearly, medium to longer term investors have been thinking, well, if Russia's prepared to attack Ukraine, well, why not Georgia and related? I think that's unlikely. And, as can be seen by events over the last 18 months, I think clearly Mr. Putin's actions were so negative at so many levels, but and maybe he has learned a few lessons as well beyond that. We shall see how all of that hopefully moves on, but we shall see. On Georgia, generally observed that some of the fear factors, and actually some of the interesting, quite recent local political issues have impacted the Bank of Georgia shares in various volatile ways at various points over the last couple of years. But actually, when I reran the numbers again, when they had their numbers out a few days ago, I was impressed. And despite applying discounts for, oh my goodness, Georgia does have a few specific issues which are a little bit different from, let's say, the UK or maybe the States, actually, the company's doing extremely well. Will that great growth be forever? No, of course not. But tell me a financial stock where that is the case and, it doesn't really exist. Nevertheless, in sensible developing economies, financial stocks can be attractive. Brings me back again to why I think the Peru, which many of us will think about a UK-centered investor, but of course now the vast majority or a good majority of its orientation today, let alone where it would be in 2030, is of course in Asia and actually parts of Africa growing as well as other parts of the world. And clearly the Peru deciding to split themselves up and related was a very smart move. And if you like the UK or UK investment prospects, energy related is I guess something that you would prefer to look at. Ditto the kind of the Peru US variant is no doubt something for US centered insurance and related operators to appraise if they wish. All I would observe is that if I had to make financial sector investments, I have to say developing market financial stocks, be it banks, insurance, would be more attractive to me, which is why Bank of Georgia, you've probably made some very good money on that stock, would be my guess over the last, if you're holders today and we're holding for any time period. As always wise, take a little bit of profit at some point, but it's still coming in as slightly undervalued from my perspective, and they're buying back shares and related. Looking forward to those Peru numbers in a couple of weeks' time to see what they say about life. So as always, loads going on. It's clearly an active world out there. If you like, finale conclusion, I seem to be coming to an awful lot at the moment. But hey, that's life. That's what being a kind of an active global investor, I guess, naturally is all about, really. Or at least hopefully a thoughtful one. We shall see how that progresses. So looking forward to next week. A few more numbers in the final, half week or so of the 6.5 week corporate earnings cycle, which, as I say, never really ends, but I kind of think about it that way. The majority of the companies are almost done now. BRICS meeting is going to be fascinating, as will general macro insights and a bunch of other ups and downs, volatilities in August markets too. As always, I'll come back and talk about those a couple of times next week. But thanks so much for listening. Really appreciate it. Give me any questions you have to my various ways of contacting me, and we'll speak again soon. So thanks for listening, and bye-bye.